Welcome everybody. A few familiar faces I can see as well who've joined us tonight to hear our talk on SME for Labour, the impact of COVID-19 pandemic on small business and self-employed people. Can everyone hear me okay? Just raise your thumbs, let me know, that's great. Good, we have a great lineup of speakers tonight. But first of all, I just wanted to say thank you to SME for Labour for hosting this event, and it would encourage you to join them and sign up to their newsletter. They are the voice of small business in the Labour Party, and you know, we're really welcome to hear your views. We're going to finish at 7:15 this evening, and in a second I'm going to introduce the speakers. We're going to ask them to speak for about 8 minutes each, and then we're going to take question and answers after that. If you want to ask a question, if you could just perhaps jot your question down in the chat room, and I'll take it later on. And if you could just indicate whether you want to ask a question yourself or you'd rather I asked it for you. My name's Mark Glover. I'm a former councillor for the Labour Party. I'm now chairman of SEC Newgate, which is one of the UK's biggest PR companies. And I'm also on the board of the PRCA and SEC Newgate globally. I've got a great lineup of speakers tonight. We've got Andrew Chamberlain, who's Director of Policy at IPSE. We've got Kate Dearden, who's Head of Research Policy and External Relations at Community the Union. We've also got Tom Blekinsop, a former MP, but now Senior Advisor to the Federation of Small Businesses. We've got Andrew O'Brien, who's Director of External Affairs of Social Enterprise UK. And last but in no means least, we've got Abena Oppong Asare, who's the Shadow Exchequer Secretary, and also Chair of the Labour Women's Network and MP for Erith and Thamesmead. We're going to take those speakers in order, and I see we've also got in the audience Bill Esterson as well, another Member of Parliament for the Labour Party. Welcome, Bill, to see you this evening as well. So if I'm going to kick off by asking Andy to say a few words first, and ask the speakers if you could keep your contributions to 8 minutes at max. That's great. Over to you, Andy.
Thanks very much, Mark. I hope everyone can hear me okay. If you just give me a little nod or something to let me know, that's great. Thank you. It's lovely to be here amongst so many people that we know. It's great to see Phil Ross is here, and I think I saw Martin McTague was on a minute ago, and Bill Eston. It's great to see you too, Bill. And speaking alongside some of our other friends like Abena and Kate as well from Community. So it's really good to be here amongst you. And thanks very much to Ibrahim for organising this event. Now I've got 8 minutes, so I'm going to set a little timer for myself so that I don't overrun, because I have a tendency to do that. I'm going to start off by throwing a few stats out there, and then I promise I'll stop using stats. But I just think there's a bit of a story going on with some stats when it comes to self-employment. And I suppose I should also say, because I'm sure not all of you will know, that we are IPSE, not IPSA, because I know MPs don't like IPSA so much. We're IPSE, and it stands for the Association of Independent Professionals and the Self-Employed. And we are a trade association which represents self-employed people in the UK. Self-employment is beginning to shrink after 11 years of continuous growth. So we had ONS stats out earlier this week, which showed the total number was down to 4 million, around about 4.4 million. At the start of this year, it was 5.1 million. So it's shrunk by 13%. Sorry, at the start of last year, I should say. So it shrunk by around 13%. The number of self-employed universal credit claimants last year grew by 341%. So there's a real story going on here behind these stats. Something quite drastic is happening to the self-employed in the UK at the moment. Now, what's the story for those that are still in business? So we know we've lost a few. We know we've lost quite a few. But what's the story for those that are still in business? So we constantly are doing research on this. ONS stats from last April showed that this was just for April last year. it showed that 60% of self-employed people reported a fall in income for that month, while just, and I say just, it's still a big number, 22% of employees reported a fall in income. So the pandemic hit self-employed people particularly hard, but of course it's hit lots of people hard. But for the self-employed, it's been a particularly difficult time. We commissioned some research with Edinburgh University. According to that research, we learned that 74% of self-employed people experienced a fall in income in the first half of last year. And on average, for those that reported a fall in income, the average fall was by 76%. So what you can tell from that is that for a good number of people, their income fell off a cliff. They went from having some income to having no income. 69% reported concerns about their cash flow in 2020. And the year before, just 8% reported concerns about their cash flow. Now, keep an eye on this. As I say, we do this thing called the Freelancer Confidence Index, which tracks confidence of freelancers and self-employed people over time. What that shows us in the most recent batch, which we have, which was for the last quarter of last year, it shows us that, sorry about that. It shows us that income is starting to stabilize. So that's good news. But the self-employed people are working more hours to get it. Rates have fallen. People are doing more work to earn similar income to that which they were earning last year. What does all this mean for businesses? Well, debt's a big part of the story here. So we did some other research with Starling Bank last year. 1 in 4 self-employed people reported that they had taken on credit card debt. 1 in 7 reported that they'd used their overdraft, and over a quarter said that they had used up their savings. So what's the human cost of all of this? Well, we did a report into mental health as well. And that showed that a quarter of self-employed people said that their mental health was either poor or very poor. That's a 300% increase in people reporting that since the year before. So a big spike in mental health concerns. 32% reported that they were highly stressed. So that's the stats over with. And of course, stats will only tell part of the story. In fact, some people have done okay during the last year. For some people, they've actually done a bit better than okay because they've been in sectors that have still been open. They still managed to do their work. They're still invoicing. They're still getting paid. And perhaps they were lucky enough to be eligible for some of the support schemes that the government made available last year. I've got 3 minutes and 19 seconds left. So the main one I want to talk about is the SAYS scheme. Some people call it SEAS, or SAYS, Self-Employment Income Support Scheme. This is the one that the government launched in about March last year. They announced it, and it's been more or less continuously in effect, but with some strange gaps and planning. The way that it's panned out hasn't been that way, and we still don't know what the next round of SAYS, which we're technically within now if you follow the sort of timeline of it, but the government doesn't like to talk about the timeline of it, but we're technically within it, and we don't know for sure what it's going to be in terms of how generous it's going to be, and crucially who it's going to help. So when this came out, we welcome this, and both IPSE and the FSB, and Tom's here and we'll speak a bit later, were consulted by the government on the SAYS scheme, and we were grateful to the government for putting this into effect, and the government and their officials did a good job of actually wheeling this out. They set up this new thing, hadn't existed before, and it actually got money into people's pockets very quickly. So they deserve credit for that. What's been a bit more disappointing, though, is that since that time, since it was launched, it hasn't been improved. And so many people have come forward, and many of you will be involved with the all-party group for Gaps in Support and will know all about this, that there are quite a few self-employed people who you would think should benefit from that. It's the Self-Employment Income Support Scheme. No one's denying that they're self-employed, yet they don't benefit from it because of the eligibility criteria. Now, there's a couple of groups I just want to highlight. One of them is company directors. They are not included in the SAYS scheme. They can make use of the furlough scheme or the coronavirus job retention scheme, but it doesn't work very well for them because they probably pay themselves in a mixture of salary and dividends, and it will only help them with the salary proportion of the money that they're now not getting because of the pandemic. And also they have to furlough themselves. And when you are your own business and you have to furlough yourself, it means your business effectively stops. So it's not an ideal scheme. It's not designed for them. And although they can make use of it, it's not very generous and it doesn't work for the way that they do business. It would be better if they were included in the SAY scheme, but the government said they couldn't do that because they paid themselves in dividends and they couldn't work out the dividend payments. Now, we came up with a proposal which we called Pay Now, Claw Back Later. The Treasury Committee really liked it. This was last summer. They included it in their report. The government wrote back and said, no, we've looked at that proposal. We can't do it. There's been other schemes put forward to them, which are not our schemes. We didn't design them, but we support them. Things like the Directors' Income Support Scheme, which Tom might talk a bit more about. I won't steal your thunder on that one, Tom. So there are some ideas out there. And what the disappointing thing is that the government hasn't taken them on. I've got 10 seconds left to say another group I want to highlight are the newly self-employed. They're not really new. They just didn't have a tax return for 18-19. The big question mark now is, now that we've had a whole nother tax year and the deadline has passed for submitting that tax return, are they going to be included? That's my timer going in the new scheme. And we hope that we'll hear some positive news on that in the budget next week, but we'll have to wait and see. Thank you very much.
Thank you very much, Andy. Really good introduction to the topic. I'd now like to ask Kate Dearden, who's Head of Research Policy and External Relations at Community, the union, and also a former Chair of Labour student, to speak and give us the union's perspective. Kate, over to you.
Thanks, Mark, and thanks so much for inviting me this evening. It's great to see so many friends and can also spot some community members as well in the audience, so great to see you all here. Community, for those who might not be aware of us, we're a modern trade union representing workers across the UK economy, from sectors such as steel, justice, logistics, finance, education, and many more sectors, both employees and the self-employed. And in my remarks, I think Andy's already given some brilliant background to the situation, some really, really useful statistics, and I don't want to repeat all those. Sort of the situation that self-employed workers have found themselves due to the pandemic and those extremely difficult circumstances. And there's so much brilliant work going on, I think, across the board with Andy, the FSB, MPs in Parliament, Labour's been brilliant in sort of raising the voices of all our members, and that's massively appreciated. And I think events like tonight can sort of bring our message together again and sort of reinforce all that brilliant work that's happening to try and change the government on their current strategy and what they're currently supporting for self-employed workers. We've had members at Community who have been excluded from the self-employed income support scheme and relying on food banks and relying on us as the union to help them financially because it's been that difficult for them. You know, our members, they feel like the government doesn't understand them, their work, what they do, and have no idea. They think that the government actually doesn't understand who the UK's self-employed workforce are of today. They feel like they're viewed by suspicion from the government, that they're a second thought. You know, we see government announcements and it's always support for the self-employed that's secondary. And they really do feel like the forgotten self-employed from this pandemic and the forgotten workers much of the time. You know, we're coming up to a year now, as Andy said, where millions of workers have gone without any financial support at all. Government has to act. They've been given the solutions by all sort of organisations on this call and beyond, other sister trade unions, and they're still not acting. You know, so we wanted to get the experience of our members, of organisations and other stakeholders and bring it all together to work out what exactly the government needs to do now and reinforce that message that all these brilliant organisations are talking about, but also what we want the future of work to look like for these workers in the future as we sort of come out of this pandemic. So we launched an inquiry into the future of self-employment with Prospect Trade Union and the FSB to ensure that self-employed workers were given a voice. They're sort of elevating their experiences from this pandemic and making sure that they're heard. And as part of that, we surveyed thousands of self-employed workers, took evidence from experts like Andy from IPSE and sort of campaigning groups like the Forgotten Limited and the Excluded UK. And as part of those surveys, we found some really, really concerning stats as well. And this will be my only stat to not bombard you with them. But we found that 46% said they were less likely to continue in self-employment due to their experiences of this pandemic. 18% were unsure, and only 36% said they were likely to continue. Those figures, we think, released by that inquiry, should be a massive wake-up call to the government. In addition to that, we found that 75% didn't believe they have sufficient workplace rights compared to employees from their experience of the pandemic and beyond. I think seeing self-employed workers through a framework of concern has led to these stats, has led to these findings, these experiences. You know, the government have approached self-employed workers about the potential fraud, and sort of that's inhibited their ability to provide truly comprehensive financial support to millions of workers during the coronavirus pandemic. And that has resulted in them being excluded from government support schemes and loan schemes. So along with all these other organisations, MPs and bodies, we're also urging the Chancellor to put himself in the shoes of self-employed workers and our members in particular who've been struggling. Think about what it's doing to their mental health, their livelihoods and their families. And although an end is in sight from this pandemic with the vaccine, it's really encouraging, there's still a really uncertain couple of months ahead for a lot of self-employed workers. Work's still dried up, entire industries have come to a halt. And many of our members are sort of on that low paid spectrum. They deserve better, they deserve to be treated equally. They all pay into the system too. So what next? So we've called for some specific recommendations, very much echoing a lot of what Andy talked about in terms of the self-employment income support scheme and plugging those gaps. So I won't go into too much detail on those. But longer term, we're calling for a proper safety net for the self-employed. So that this report and this inquiry looks at sort of the future tax regime, the safety net for these workers, their job security and employment rights, and how we can actually improve that government understanding going forwards for the self-employed and freelance landscape and avoid the inequalities that we've seen and exacerbated over the past year. And again, can go into a bit more detail in the Q&A about that on things such as extending health and safety rights at work, sick pay, paid parental leave, and so on. So to sum up, I think the support is extremely necessary for the self-employed and freelance workforce to enable a swift economic recovery this year and beyond. It would be a disaster for our economy and prospects of recovery if this section of the workforce who play such a fundamental role are not properly supported to do so. History has shown us that a properly supported self-employed workforce can actually reverse a nation's economic fortunes after a downturn. We saw that in the immediate aftermath of the 2008-2009 recession. The self-employed made approximately 90% of all jobs that were created then. So I think, the rapid increase we've seen in self-employed workforce and small business owners played a notable role in helping our recovery then, and if supported, can do the same in helping us to build back better from this coronavirus pandemic. And I'll end, and I think it's about time that their vital contribution of those workers are recognised and that they are given the support they need for those who have missed out, but also greater security going forwards. Thanks.
Okay, thank you very much. I think that you've highlighted some of the real issues that the self-employed are facing, especially in accessing some of the schemes that are or maybe not actually set up for them. Our next speaker is Tom Blekinsop, who, a former MP, is now a Senior Public Affairs Advisor to the FSB. Tom, over to you.
Thanks, Mark, and thanks for inviting me tonight. Really appreciate being here. This is a critical moment in which we can lay the foundations for job creation, a small business-led job creation, economic recovery across the UK. It's about, yes, there are severe problems out there, as outlined by Kate and Andy, but there are also opportunities, but it's about getting the right policy in place and influencing government in the run-up to the spring budget to make the right and sensible choices going forward. And we've been calling on the Chancellor to use next month's budget to address gaps in the business support landscape, tackle the debt overhang, incentivise job creation and save the supply chain. And we've welcomed the vast part of the current support measures that have been put in place. We do, though, believe it's important that the package of support changes, iterates over time, both as the economy continues to operate under severe restrictions as we look to carefully reopen over time. And the FSB welcomed Labour's latest policies, for example, such as the British Recovery Bond scheme to assist entrepreneurial startups, and also the latest policy on the wider economy in relation to pro-enterprise proposals from Kia over the last few days. So Labour's desire to extend business rate relief over the next 6 months is also really welcome amongst our members. But the things we've been pushing for recently, because we've noticed as Andy pointed out, in terms of stats changing, some of those stats becoming quite acute. And recently, what we've noticed in relation to our pre-budget conversations amongst our members and staff is that within the small business community, the supply chain is the most acutely affected at the moment. And we've been calling for an extension of cash grants and business rates relief to those within supply chains suffering from severe falls in revenue, to extend business rate exemptions introduced at the start of the COVID crisis through to 2022, and to permanently bring the rateable value ceiling for small business rate relief up to £25,000. We've also called for an introduction of fresh retention bonus for employers who bring staff back to work from furlough, and reduce employers' NI contributions before the retention scheme closes, whilst creating new support mechanisms for those out of work and thinking about launching an enterprise. We've also said that the government should be looking to extend flagship support schemes to cover the full periods over which restrictions are in place, and adopt FSB's proposals for bringing those with 2019-20 tax returns into scope of the self-employed income support scheme, SACE scheme, and introduce a director's income support scheme, which I'll go into in a bit more detail later. So why this? Well, an extension of business rates relief and cash grants, as well as support for suppliers, directors, and the newly self-employed, would not only help firms get back on their feet, but also send an important signal of UK economic confidence as we exit the peak of the pandemic. We're also calling for incentives to bring workers back from furlough before the job retention scheme ends, including a reduction in national insurance contributions and the return of job retention bonus. And this is also the time to renew efforts to tackle poor payment practices, which have been exacerbated by further lockdowns. Why B2B specifically? Well, the current situation is particularly challenging for small suppliers. FSB research shows that 1 million small firms who are left out of support measures, including those in supply chains, are saddled with rents and rising business rates. The new figures show shortcomings of sector-based support, with analysis indicating that the majority of furloughed staff work outside of retail, leisure and hospitality. Business rates relief and grant support mainly reaches businesses that sell direct to consumers, to the customer, and the suppliers that sell to them in turn are not eligible. And this is a huge problem that affects a huge range of small businesses, from coach firms who'd normally be running tours or driving supporters to football matches, as they've been classified by sector under transport, to baggage handlers for cruise ships, laundry services for hotels, and beef suppliers to restaurants, again due to sector categorisation. And these suppliers, customers are closed, yet they are not eligible for support. Saving B2C without saving the B2B supply chain will make a timely recovery harder to achieve. And the scale of the problem for small suppliers is that 56% of those on furlough are in sectors outside of retail, hospitality and leisure, and will mainly work for B2B suppliers, yet only around 10% of grant support is available to those outside of retail, hospitality and leisure. And the business rate situation is even worse, with firms who've suffered massive drops in revenue still charge tens of thousands in tax each year, even though their customers are banned from trading. A coach firm whose business is based around coach tours might be defined in the rate system as a transport business, but clearly it is heavily impacted by current restrictions. Small suppliers outnumber businesses that are customer-facing businesses 3 to 1, and that's a large ratio. Without maintaining a supply chain, your B2Cs won't have anything to sell. So how to fix it? Government should introduce a revenue test so that firms who face severe falls in revenue following the pandemic do not have to pay business rates. And this would have should help extend support to suppliers who've been missed out so far. They should also make discretionary grants available on a proportionate basis to the use of furlough to firms outside of retail, hospitality and leisure. In terms of the self-employed, we believe that an extension to SAYS for the newly self-employed should be considered. Treasury was clear to us that the reasons why it did not consider itself able to include newly self-employed in the original SAYS scheme was citing difficulties in reliably identifying those who had relatively recently entered self-employment. But we think that if a carefully limited expansion of SAYS for those in SAYS 1 round 1, 22% fewer applied than were eligible. In grant 2, this increased to 34%. For grant 3, we expect this trend to continue. We think a limited expansion of SAYS in this way for newly self-employed would therefore be a relatively moderate cost to the taxpayer and will be highly significant for the self-employed traders. Another issue for the self-employed, of course, is universal credit. For the self-employed, the postponement of the minimum income floor being reinstated until April was welcome, but we would welcome this suspension being continued. Longer term, we've always had serious concerns about the appropriateness of the minimum income floor for the self-employed who rarely receive their income on a smooth, regular basis. Self-employment as a route into work is something we very much support, and therefore the current crisis has thrown into sharp relief our long-standing recommendations on the minimum income floor, which we will continue to recommend following any future lifting of the current suspension. We think the extension of the startup period where the minimum income floor is not applied from the current 12 months for a longer period of time on the basis of it normally takes 3 years for a business to get up and running and generate profit. So second, we'd also like to see the minimum income floor assessment to be carried out on a longer quarterly basis, so it takes into account those peaks and troughs. We've also called for a directors' income support scheme. This is a group of the business community that have been pretty much ignored in terms of government support. Our proposals were that a taxable grant for this of limited companies calculated at 8% of 3 months average monthly trading profits, paid out in a single instalment and capped at £7,500. But I'm more than happy to go into that in more detail on that, because I'm quite I know that my time's running out, so if people want to ask questions about that, I'm more than happy to answer.
Thank you very much, Tom. Really good summary, I think, of some of the things that we need to think about in terms of supporting those people who are self-employed. Our next speaker is Andrew O'Brien, who's the Director of External Affairs at Social Enterprise UK. Andrew, over to you.
Hello, I hope people can hear me now. I've just been unmuted. Thanks very much for inviting me to speak here today, and delighted to be able to support SME for Labour's event tonight. I think it's really important to take stock of what COVID and the impact has been so far. I just wanted to touch on, I suppose I've got a little bit of a history lesson, I guess, of what's happened over the past few months from a social enterprise perspective, and then maybe touch on what we can do going forward. Social enterprises are businesses, first of all, just to make that clear. We see social enterprises as businesses which have a social or environmental purpose, and who make a profit, trade to make a profit, but then to reinvest that profit back into communities, back into the business to try to deliver that social environmental output. So we are talking about businesses here, and most of them are SMEs. At least 90% of them are SMEs under the kind of the traditional definitions of the term. So they are businesses, and they've suffered many of the same issues that businesses have done. Unfortunately, government didn't recognise that they were businesses to start with, and that was a real barrier, first of all. And I'm sad to say the amount of time that I spent trying to educate government ministers and officials with really basic information about trade and where income streams were coming from and the importance of getting business support to them, and the 2 million people that are employed in our sector was shocking. And I think that's a real lesson that we need to learn. Is I actually think we take for granted how much government really knows about business of all scales and all sides and all sectors. And once we got that out of the way, I think then we started to see some progress, and social enterprises were lucky to get access to the £750 million kind of charity VCSE fund. But even then, that element of it probably only ended up being about £30 million, which for 100,000 organisations is not really enough. We then, I think the biggest move we saw, and I think this is a lesson that we can learn for all future economic recessions, is the issue around the kind of discretionary grants and business grants that are provided to local authorities. For our members, those local authority grants have been an absolute lifeline, and I think local authorities have been much better than central government and understanding the difference between businesses that are paying business rates or large employers and those that are working to deliver social and environmental value. And what I mean by that is there are different types of businesses delivering different types of impact. Not every business is equal. And what we really need to be doing is try to preserve those businesses which have the the most social and environmental and economic positive impact in those local communities. And I think local government has been really effective at identifying those, and those grants have been very, very helpful in distributing support to those that need it. And I think that's the kind of model of, yes, national support, drawing on the benefits of the UK as a developed country with an ability to borrow, but giving that support to local councils and local authorities so they can really drive delivery and make a difference. The other kind of key issue we've had as well, I think, is around I think, again, not quite a level playing field between different sectors. So, for example, I don't know if this has been mentioned by other speakers, but I think one of the really innovative areas that's come out is the tech equity fund that government has created. So the government actually taking stakes in startups and SMEs in the tech sector. I think around £2 billion of equity stakes have been taken on, which is a really innovative model and is a great example of how government at pace can do things differently. But again, why are we only focusing on tech, and why are we not looking at the whole economy, and why are we recognizing the value added from all different types of sectors related to this? We can't just build all our economy on digital skills and new technology startups. We do have to have a broad-based economic recovery, and the fact that a lot of SMEs are still being asked to take on debt through things like bounce back loans and C-bills and so on, and in certain sectors we're getting access to that more innovative equity flexible support, I think is a real dilemma. I'm not really sure why that is. One of the ideas we've been pitching to governments, enabling small businesses to turn those bounce back loans and C-bills loans into, if not equity, at least into some kind of quasi-equity, which is effectively a form of repayable finance, whereby as the business grows, you pay it back. And I think government has embraced a little bit of this with its kind of student loan analogy on bounce back loans, but it's not going really far enough. And the classification of that is so important, because I think, as SMEs on this call will know, on your balance sheet, having equity is an asset, having debt is a liability. And if you want to raise money in the future and grow your business, having liabilities is not exactly a great place to start with. So there is something to be done there, I think, about being more and more critical about the support that we're providing. And I think the kind of final bit, I suppose, I wanted to kind of touch on, I suppose, going forward and building back better. I've been really encouraged by the work that's taking place from the Labour Party, and the noises coming from the Labour Party around kind of purposeful, responsible business. Actually, after this meeting, I'm going to be talking on LBC about corporation tax cuts and the effectiveness of those tax cuts. And I think it's a classic example, I think, of how the Westminster Village is not really understanding what we need going forward, and the kind of Westminster bubble. So, I know for SMEs in this room, most of you, if you are paying corporation tax, it's probably not your biggest worry right now. And, to have a profit would be a nice thing to have. What we need to be able to do is to stimulate kind of productive investment and skills and training and job opportunities. And the corporation tax rate doesn't really have much of an impact on that. The evidence that we can find, it doesn't make people more likely to hire people, doesn't make them more likely to invest, doesn't make them more likely to support their local community and support that recovery. So what we need to do is to focus on those broader structural changes that are really going to help us move to the next place. Now, what our members and social enterprises have learned is that, and I think this is true not just for social enterprise SMEs, but I think for all SMEs, is that those SMEs and social enterprises that have that sense of community purpose, social vision, are thinking long term. And when they start to think long term, you're more likely to make those productive investments. You're more likely to take a punt on younger people to give them employment opportunities and to really upskill them and support them. And that's the kind of change we need to see in our economy, is supporting more business models like that and cooperatives as well, that have demonstrated time and time again that they have that patient, long-term vision to deliver change. And that will do, and promoting those forms of business will do far more than any kind of temporary changes to the corporation tax rate, for example. And I think Labour's talking about these issues, Keir Starmer, Annalise Dodds and Ed Miliband, talking about issues around purposeful, responsible business. I think that is the future of business. And if we can get a much more nuanced conversation to take place within our politics around looking at the key issues affecting our economy and looking at those structural challenges and how we need to upgrade and reform all forms of business to meet those 21st century challenges, then we'll be in a much stronger place. So I feel optimistic about, I think our members feel overall optimistic about the future. I mean, we've got through a really difficult time, but there's still opportunity to be had there. But we've got to start focusing on those real issues rather than getting distracted by things like, you know, do we have a 23p corporation tax rate or a 19p corporation tax rate, which I think could end up occupying far too much time and ignoring the needs of SMEs and social enterprises and the support that they require. So I hope that's helpful as a bit of an introduction, and hand over to my fellow panelists and Mark.
Thank you very much, Andrew. Really good. And I know this is a topic that Ed Miliband is particularly interested in, having had a number of conversations with him about this over the last year. Our speakers have thrown up a lot of issues so far, and we come to our final speaker now, Abena Oppong Asare, who's our Shadow Exchequer Secretary, and as I said, President of the Labour Women's Network and the MP for Erith and Thamesmead, who you've got quite a lot of questions there to answer of what Labour's going to do. So over to you, Abena.
Okay, thank you. I thought I'll begin by, I just wanted to begin by thanking ERM for inviting me to speak on this panel, and also Mark for chairing this. And also thought I'll take the opportunity to do a shout out to my colleague, Bill Eston, who's the Shadow Minister for International Trade. I know this is a special area for him of interest because he used to be the Shadow Minister for Small Businesses. So you definitely have an ally right here. And I also want to say that for me, it's a pleasure to be amongst you guys. I remember hosting the first SME for Labour event. So I do know you guys are the voice of small businesses, and I recognise quite a number of you here. I just want to be very clear that, you know, I'm very happy to be here, and with the Labour Party, we are at a position where we really want to listen and essentially learn from you, and also reassure you that we want to work collaboratively and trying to be that voice for you in Parliament. I know in the past there has been concerns about our messaging, particularly in terms of speaking on behalf of small businesses. So I hope you feel reassured that, you know, we are taking this really seriously. I thought what I'll do is I'll talk about what we are doing at the moment in Parliament, the Treasury team, us in the Labour Party. I thought I'll just quickly, on a personal perspective, say that, you know, I have been looking at the impact COVID has had on small businesses. I have quite a number of them in my constituency, and I've been really concerned about things such as mounting rent arrears, business rates, finance and insurance. And as Andy mentioned not long ago, you know, there are concerns particularly about, you know, the self-employed who haven't heard from the government about the fourth self-employment income support scheme. This is something that we have been really vocal about in Parliament with the government. And just yesterday was opposition day, where we got to raise these concerns again with the government, particularly the Chancellor. We know that the budget there's going to be an announcement at the budget, but what we really want to know is who will be eligible for that support, particularly as we know people have already submitted their 2019 to 2020 tax return. And I know this is something that Andy mentioned, and also been working with community as well, with Kate, to hear firsthand people that are self-employed members, to see what their concerns and where the gaps are. And, you know, Kate mentioned about, you know, support for self-employed, saying that they felt they were very secondary. It was interesting, and it was good to hear from Tom and Andrew, particularly on how Labour's been behaving so far in terms of responding and what we're doing. And Andrew mentioned about Labour on the responsible business. I thought I'll talk to you about where we are quite now. So what we have been doing, and I know Tom has mentioned some of it as well already, is that we are calling for essentially 100% business rates relief from retail, hospitality and leisure businesses to be extended for at least a further 6 months. And this is something through conversations that we've had with small businesses, and for me, from a personal perspective, from businesses within my constituency, that, you know, one of the things we're concerned about is that it's clear that economic activity, it will still be limited at that point, even though we are looking at, the government's looking to have health restrictions being lifted. What we're also saying is that these business rates are not linked to profit, and so will represent a significant fixed cost for businesses that are essentially already struggling. And what we do know, I see it in my constituency where I've got 2 councils in my constituency, Greenwich and Bexley, and we're going to see across the country, councils will essentially need to issue rates letters in the next month. And so we do need the government to essentially provide certainty to confirm that these rates relief will essentially stay in place to at least October the 1st. And we're saying that this could be reviewed at a later date if restrictions are in place and there's still accurate pressure on demand. We also are calling for the government, and as you've seen with like Labour colleagues in Wales, they've essentially, what they've been doing is making the rates relief targeted by introducing the cap. So what the Welsh government has done is essentially they've applied a cap so that retail, hospitality and leisure businesses with properties with a rateable value of more than 500,000 were not eligible for that relief. We feel that by the Welsh government making this change, they've essentially basically freed up about 100 million to kickstart in its economic resilience fund, basically enabling grants to 2,000 SMEs. By contrast, what we're seeing is in England is large supermarkets and other stores that have not suffered from the fall in demand during the crisis have handed back the money they have saved from rates relief to the Exchequer, which has essentially amounted to around 2 billion. And the Welsh government has consistently offered essentially a more generous support for businesses by adopting a more targeted and responsible approach than the Chancellor. And we're saying, Labour, we're saying that the UK government should put in place a similar cap for essential retail businesses above a certain size, with the cap appropriately collaborated for England. Now, I appreciate that is a short-term kind of solution. In terms of long-term, what we are saying as a party is we're calling for a root and a branch review of business rates to help bricks and mortar retailers compete with online tech giants. One of the things that we've noticed, unsurprisingly, during the COVID pandemic is that, online tech giants are essentially kind of doing quite well during this period. And so we feel it's important that the government takes that work forward and designs a new system that is essentially fit for purpose. We are going to be we're going to have to do things differently because of the situation that we're in. I mean, businesses we need to be forward thinking. The government needs to be forward thinking in terms of what the businesses are going to be going through. The reduced rate of VAT extension, I think Tom mentioned it earlier, that's one of the things that we're doing. What we're saying is that the government should extend the temporary 5% reduced rate of VAT for hospitality and cultural sectors until October the 1st, or 3 months after the restrictions have been lifted, whatever is later. And we think that this will help stimulate the demand for their services in the crucial period after restrictions have been lifted, where consumer confidence will essentially be critical to our economic recovery. As with businesses rates, the extension should be reviewed closer to the expiry date, so that there's still accurate pressure on demand. We're also calling for a COVID plan for British businesses. So our proposals would see all businesses who are borrowed through the bounce back loan scheme offered the option of paying it back on an income contingent basis as administrated by HMRC. So what that means is that businesses will only pay back the loans when they are growing. So it's essentially, what I say is, it's like, it's similar to student loans. where you only repay it when the income of borrowers rises above a particular level. Does that make sense? And this would recover more of the loans for the taxpayer without hindering businesses' ability to invest and hire staff. For larger SMEs who have basically borrowed through the Canova Business Interruptions loan scheme, different options will be needed. So this would require an agency to essentially, a new agency to manage and correctly value the debt that has been taken on. So looking at essentially an individual basis. Our proposal is we will see borrowers here offered a number of different options based on what is appropriate for individual businesses, because not, as you all know, not every business operates the same way or has the same kind of needs. And so what that would also do is there will be an option to transfer debts into an employee ownership trust, which would give employees professional shares in businesses. And I just want to be very clear, this does not come with voting rights, and it allows them to have the ability to acquire 10% of the firm when there is future change of control. And this is something that was also proposed by the Federation of Small Businesses. And then there's also an option for government to convert the type debt into preferential shares for the taxpayers, which also don't come with voting rights, but would essentially mean that there is a fixed annual payment that must be paid by other dividends, can be suspended if the business is in difficulty. And also one of the things that it would also help them is it would help them essentially not get into debt. It will give them the flexibility also to look at paying loan repayments and supporting them to invest for long term and take on more staff during the recovery. Because I'm sure, you know, with your businesses, you've had to cut back down on staff because you haven't been getting the support you've seen. And this will also come with restrictions on payments of dividends, remuneration and of management, and as well as anti-avoidance and fraud protection. This option is similar to proposals put forward by the recapitalisation group. Labour's also calling for about 100,000 new businesses. So what we're looking to do is increase our support available for startup and help create new businesses over the next 5 years, with particular focus outside London and the Southeast. And to reach that goal, our plan is to firstly boost the startup loan scheme. So the government's current flagship startups loans currently has only supported creation of around 9,500 companies per year. And what we've seen is that ministers have only provided funding for the startup loan companies to support entrepreneurs until next year. And so what Labour's actually looking at doing is boosting up startup loans with a 5-year funding guarantee. So that would mean that we're funding 200,000 new businesses a year over the next 5 years. And there are some other things, but I'm just going to kind of wind up. I just want to essentially close by saying that we're very, very keen to listen to you guys, because this is your sector. And we're very keen to make sure that we are speaking on behalf of you in the right way. So if there are things that you feel that we should be raising, it would be really helpful to know. And I know having spoken to loads of businesses, this has been really, really difficult for all of you guys. And so I hope you feel that we're trying our best to speak on your behalf. I'm going to stop now before Mark cuts me off.
Okay, thank you very much, Abena. You read my mind there. But really interesting to hear Labour's position. And I know we've had a number of people respond to that. Well, I think I'm going to, before we throw it to the floor for people to ask questions, we do have the former Small Business Shadow Minister, Bill Esterson, with us. So I'd just like to ask Bill to maybe say a few comments, and then we'll take, then a number of people have indicated they've got questions, so I'll go to them, but over to you, Bill. Could come off mute.
Thanks very much, Mark. So that's very kind of you. And thank you for the kind words, Abena, and you, Mark, as well earlier. It's great to see so many of you who I've worked with over the years. And I just wanted to pick up on something Abena said there at the end, which is about listening to everybody. I've had really good advice from any number of people on this call that I've taken on board over the years when I was that shadow minister, and I'm still doing the export side of our trade brief, and we have to have an export-led recovery, and we are really bad in this country at supporting small firms who want to export. I know Martin and Tom will have the figures from the FSB on just how many of your members would like to export but find it almost impossible. And frankly, right now, the way that the government failed to prepare for the end of transition with the EU, it is utterly disastrous. I was just listening to a constituent today who hasn't been able to export anything since the end of transition, and it's killing his business, and he's had no business support. So this is a call of excluded businesses. So I just wanted to make that point, Mark, where this constituency of SMEs in particular are naturally sharing our values. It's up to us to demonstrate to them that we can trust them to help us get into government to deliver an agenda that sees this country moving forward again. The approach that Abena was laying out there, that Keir spelled out in his speech, I don't know if anybody had the chance to see Annelise's speech this afternoon as well, around investment, around looking to the future, around looking to the way that we can use the opportunities in the low carbon economy, in new technology. And Andrew, you're absolutely right, not just in those sectors, but more widely. We've got to grab this. We've got to look at what can be done as a way of encouraging entrepreneurialism in profit making and in the not-for-profit sector. I think you're absolutely right, Andrew, about that. And I was just looking the other day at a report that you worked with me on how we might create a UK equivalent of the American Small Business Administration to provide the support for businesses that, and I know the FSB have been very vocal on this over the years, to make sure that we've got that culture in this country. We've got the kind of financial support, advice and encouragement and networks that can really power up the small business part of our economy. The US Small Business Administration has as its mission the success of the US economy through supporting small businesses. I think we should be doing something similar in this country. We must be supporting, we are saying the right things, we are making the right calls on support for businesses now in the pandemic and coming out. And I think we've got to build on that as we go forward. This is a group of people who can help us into government and help our country as well. So thank you to SME for Labour again for putting this on. And this has been a great discussion. Thank you.
Thank you very much. Thank you, Bill, for those words. The first question I've had who's indicated they want to ask a question is Sanchia Alasia. I hope I've got that right. I apologize if I've pronounced it correct. So if we could unmute Sanchia Alasia and you could ask your question, please.
Hi, good evening. No, thank you to the panel for sharing really useful insights. I wondered what the panel's response is, particularly Abena, on whether this impact on businesses also impacts people differently. So we know with COVID-19, it's impacted on people from the BME community and those who are disabled in a more harsh way. And research from organisations such as the Abena Initiative has shown that actually a lot of BME businesses are small businesses, are micro businesses. So They have very low level of cash reserves. And I know that in the chat also, there was a comment about access to loans, and that's more difficult for those from small businesses as well. So I just wondered if we needed to think about our policy response in those terms, just sort of whether people from different communities, you know, might be more likely to be self-employed and in those small business sectors. Thank you.
Thank you. Could I perhaps ask maybe Tom, do you want to have a go at that from an FSB point of view? Because I'm sure you've got a number of stats, and then we'll go to Abena.
Yeah, thanks, Mark. Of course, in terms of BME business owners, we have made recommendations to the government, for example, in terms of our research showing that ethnic minority small businesses are more likely to engage in the process, product and service innovation than non-ethnic minority firms. So in 2018, nearly 21% of EMBs reported recent process innovation, and 6 percentage points higher than the rest of the respondents. So what we saw was a flavour of ethnic minority-led firms that more so than non-ethnic minority firms, to the value of 11 percentage points to support ethnic minority businesses to recover from the Covid-19 crisis. And what we suggested to government was looking at development of R&D tax credits and the introduction of digital vouchers for smaller businesses seeking to enhance their adoption of digital technologies, for example, to assist smaller businesses that don't have that capital reserve to make the advances that they need to in order to grow, or indeed survive the last period of COVID. And that's not just for minority ethnic businesses, but also for businesses owned by women, of course, and trying to ensure that those groups, because women business holders, or business holders who are women, tend to have smaller businesses and need that support in the assistance of R&D tax credits that we've suggested. We've also suggested that a dedicated scheme to help ethnic minority-led businesses to access external finance, alongside awareness raising and within a dedicated scheme similar to the now defunct Aspire Fund, should be looked at going forward.
Okay, Abena, would you like to?
Hi. So I think that that's a really important question that you've raised, because in terms of self-employed businesses, you see that there's a range of people from diverse backgrounds running it, and one of the concerns that I've had personally is that we're losing a lot of those skill sets and individuals. One of the things that the Labour Party is doing is through the coronavirus business interruption loan scheme, the different options that will be provided will mean that there will be various support for different individuals to make sure that it meets their kind of needs. And so the interruption loan scheme would have different options and will help individuals to be able to borrow different amounts, which will be best for their businesses. And I think that's something that would essentially help particularly businesses. One of the things that we have been doing also is essentially I've also been meeting with various steering groups just to kind of ascertain what are the key issues, where are the gaps, whether there are concerns about, from a personal perspective, from what people have said to me, that there are concerns about discrimination in terms of actually getting the loans or the kind of support as well. But I think it's really important that we look across the fields as well, as women as well. Pregnant Not Screwed have highlighted how particularly SEISS has impacted women in kind of a negative way. And so we are seeing a lot of things kind of unravel in terms of the fact inequality existed before COVID and impacted certain groups a lot more. And because of COVID, it seems to have widened, but I think that's really important in terms of addressing that.
That's great. Thank you very much. I'm going to move on to the next question, and then I'll allow the other speakers to come back. Peter Udall is, I think, a director of a company that's lending. Peter, over to you. Peter, could you unmute? There we go.
Yeah, sorry about that. Yeah, hi. Yeah, thanks very much for letting me ask a question. I'm not actually a banker. You'll be glad to hear. I'm a director of responsible finance, which is the industry body for social lenders in the UK, for community development financial institutions, which many of you may have not have heard of. But then they're not-for-profit lenders who lend to small businesses, social enterprises, and individuals who are really struggling to find finance anywhere. You know, even very short-term loans, they end up having to go to payday lenders. So we help out there, and I think you know, community development financial institutions have a real role to play for SMEs. There's still a huge gap for particular segments, micro enterprises, small SMEs, that can't get finance from banks. So that's existing ones. So it's great to set up new ones, but actually there's millions of small SMEs that are sitting out there already who are going to need finance either to survive or to change or to grow, whatever. And they're finding it really difficult because they're what banks call high-touch clients. Basically, you need to spend a lot of time with them. You need to really understand what they're doing. And they're not profitable customers for banks. So it's very difficult for this group of people to get finance. And it's people like community development financial institutions who are trying to fill that gap. And I know Bill mentioned the Small Business Administration in the US. What we have in the US is actually a CDFI, Community Development Financial Institution sector, which is huge. It's in every town. There are 1,500 across the US. They're supported by banks. They're supported by companies. In COVID, they've been given hundreds of millions, billions by many corporations because they see it as their part of their wider social responsibility to support communities. And I guess my question is why aren't we doing the same thing in the UK? Why is the Treasury so resistant to doing this? Is it a policy that that Labour could support, which I hope it is?
Okay, before I go to our Labour spokesperson, I'd like to bring Andy Chamberlain perhaps in, because I think this might be an issue that your members have some thoughts about, and obviously they probably have issues accessing finance as well. Andy?
Thanks, Mark. Yeah, so on access to finance, there's a sort of pre-pandemic question mark around this. There was a whole area that existed before the pandemic, and then now we've had the pandemic. It's like another discussion. It's accessing finance, which is almost becoming finance for individuals just to get food on the table rather than to help a business grow necessarily, which is what it was before. We've definitely seen it's been difficult for the smallest businesses to get access to finance. The rhetoric, I don't have any sort of research or stats available to me, but the sort of rhetoric around this, the general mood around this is that it was easier to do 20 years ago. If you were a small business starting up 20 years ago, that you'd go to your bank manager, you probably had a relationship with them of some sort of other, they would go and you'd go to an office, you'd chat about your business, and you'd come up with something which would work for your business. That's sort of gone now, that kind of relationship's over. And there's definitely been a sort of shutting up of shop by the banks. I think that governments, and this government continuing with this, there's sort of probably the Treasury outlook on this is just leave the market to sort it out and not intervene too much, and that's perhaps failing a little bit, and that's where we might need to address this. And then just to go back to the sort of pandemic lending stuff, bounce back loans is where most of our members, if they're going to get one of these loans, they won't go to the civils, because that does tend to be for the larger businesses. There was all that trouble with the civils, you'll remember when they first started out. People needed to jump through all sorts of hoops to actually get them. And it was only the very large businesses that were going to be able to do that. So they brought out bounce back loans. They were easier to get. But the stories around that are that they were easy to get to begin with, and then they became much harder to get. And then you had to have a business bank account with the lender, and some lenders said they're not offering any more business bank accounts. So it became a bit harder. Very interested to hear Abena talk about, I think it was Abena talking about the bounce back loans and what we could do around repayment of those going forward. Some people are already calling for, which we're not at the moment, but some people are saying they should be written off, write them off, because it's going to be a nightmare trying to get them back. So I think there's a whole world of sort of policy and decision making to delve into around what we're going to do with the loans that have been taken out during the pandemic and how people are going to be able to pay them back if they are, and what we do about that. So a bit waffly all that, sorry, but they're essentially, yes, very interesting thoughts on all this stuff.
Thank you, Andy. That was really good. I was actually going to ask Andrew O'Brien if there was something he wanted to comment on this one, because I think it's something that social enterprises also may have trouble accessing finance, before I come back to Abena. Andrew, is there anything you'd like to say? Okay, Abena, would you like to? Oh, there you are, Andrew. Sorry, Andrew. I was just talking about access to finance, and I wondered if your members are having similar issues.
Yeah, absolutely, we are. Thanks. Apologies for the technical hitch. They are, and we had a BBC story about this a week or so ago, and you know, I think there's a lot of similarities across the SME sector. I don't think social enterprises are any different to other SMEs in this perennial issue around access to financial services. I think that the key problems for social enterprises have been during COVID. I think, first of all, you know, lack of understanding within the banking sector has really been exposed. And I don't think that's just for social enterprises. I think it's for a wide range of sectors. I think, as Andy kind of said, the capacity within banks has all become very much based on a kind of algorithmic response to loan applications and finance. But you really need to actually understand businesses to invest in them and to loan them money. And a lot of our members get, you know, regular complaints that they have a viable business model, they have a viable business plan, which, you know, they know can work, and they've had independent support to show it can work. But banks, because they don't have the capacity and understanding, are still not working with them. And I think that's a big issue. And also, we've had a particular sub-challenge in our sector where a lot of our members bank with the ethical banks. Some of your members, you mentioned Peter, you know, we have, you know, CDFIs, you know, Unity Trust and others. And a lot of them weren't able to offer the bounce back loans and the CBILS loans. And that wasn't their fault. I want to make that absolutely clear. It's because the Treasury did not engage with them early on in the process to understand it. And with the British Business Bank as well, they didn't understand your membership, Peter, effectively, and didn't understand the value you can bring. So we need to learn some lessons around that. And we've spoken with Treasury about the successor scheme, but I think we've got to move away from looking at loans as being the solution to a lot of these problems, actually. And when I talk to some of our members, you know, some of them do want loans, small, short-term, unsecured loans, but most of all, what they keep saying is they want patient, flexible finance. And I think that's true for all forms of SMEs. And debt is just one option there. And I think we've got to try to, in the wake of COVID, be a bit more innovative. I mean, the equity stakes, as I mentioned in the tech startups, that was an interesting idea. Can we expand that? There's issues around repayable finance in other forms. Even grant in some cases. I think, touching on the question earlier about Black and ethnic minority businesses and women-led businesses, you know, that sometimes they need a bit of grant capital to get themselves started up and moving forward. So I think, you know, I'm optimistic we can solve these issues, but we do need a much more open mind from government. And we also need just a greater knowledge and understanding of the real economy, I think, in Westminster and in the city. And I don't think we really have that at the moment.
Okay. Abena, the question was directed at you, so I just wondered if you've got an answer to that.
Sorry, did you want to?
I'll just remind people of the question was, how would Labour help small businesses get the finance they need to survive and grow?
Okay, so I mean, as a number of speakers mentioned, you know, there's quite a lot of different ranges of support that different businesses will need. One of the things that, for example, that Labour is proposing is the option for a startup loan, and what we recognise is that a large amount of individuals, for example, are looking at engaging or accessing some sort of kind of personal business support, which is currently run by the government. And there needs to be clear opportunity to ensure that this is properly signposted to people. And so one of the things that this could be done is through raising awareness through via job centres, local enterprise partnerships, growth hubs and local chambers of commerce as well, and also looking at asking employees to provide information to those staff that have been furloughed. But in terms of other things, whether other options and other ranges of support could be given to people in terms of finance, it's something that, you know, I would have to take back to the team to see what we can do in terms of exploring that much further, to see if there are other areas that we need to be raising on that.
Okay, thank you very much. I've got one last question that I'm going to ask Liz Hind to ask in a second. So if you could come off, prepared to come off mute. But after we've asked that question, I'm going to ask we're coming towards the end of our time, so I'm going to ask the 5 speakers just to give final comments, starting with Abena, because I know she has to rush off to a meeting. So over to you, Liz Hind. Liz.
Hi there. So I'm Liz Hind. A lot of you know me already as a pub tenant, and I'm pleased to say that as of this week, I'm also a research associate in the School of Law at the University of York. So my question is about legal rights for small businesses. So as pub tenants, our rights under the pubs code are being completely ignored. Key sections of the pubs code adjudication process have been suspended. Pub tenants aren't able to access their rights to market rent only. And I can go on with the ways in which our legal rights are being glossed over and ignored. So, you know, what can Labour do to, first of all, reform the pubs code adjudicator so that it actually protects small businesses, and more generally protect the rights of small businesses when they're in business disputes?
Okay, thank you very much, Liz. Very if you could answer that question, then cover off any other final comments, because I know you've got to rush off to another meeting. Over to you, Abena.
Good to see you, Liz. Thanks for your point. That area isn't actually isn't in my remit in terms of looking at employment disputes. So it's something that I would really have to consult my colleagues on that, because that's something that they've been really looking into. So I have to be honest about that. So it's something that I would have to raise.
So what we'll do is I'll take it away and make sure that's directed to the right person for you, Liz. But Abena, have you got any other final comments because we're going to have to wind up now?
No, not really. I mean, if there's any other actions that have come out of this that people want me to raise with my in my team or with other Labour colleagues, I'll be happy to do that. But thank you for inviting me.
That's great. Andrew O'Brien sadly has had to leave us, so Tom, just come to you for any final comments, or if you are able to answer about pub question. Oh, sorry, I'll go to Andrew O'Brien first because he's got to rush off as well. Sorry, so over to you, Andrew, first.
Got to do an interview later. Just to say, again, thanks very much for the very rich conversation. Really appreciated it, and great to see so many people engaging on this. I think there's a huge opportunity. I think, of course, COVID has really damaged our economy and people's livelihoods, but it's going to be on the back of the small businesses on this call and the entrepreneurs that are going to rebuild things after COVID. And I certainly feel optimistic, given the way that Labour's talking about SMEs and business, that this is going to be a policy area that's really taken seriously. So it's been great to be part of this, and I'll certainly keep in touch with SME for Labour about how we can continue to work together. So thanks, Mark, for the opportunity, and excellent sharing, and welcome. Thanks for everyone for listening and participating.
Thank you very much, Andrew. Sorry, over to you, Tom, for some final thoughts or any issue you'd like to pick up on.
Thanks, Mark, and thanks for the invitation today. I really enjoyed taking part in it. If anyone wants to get in touch with us in relation to any of the issues that we've raised on behalf of the FSB, please feel free. If you want any more information on DIS or SAYS or the other submissions that we put to government. In relation to Liz's question, I don't think I could probably answer it at the moment, but I'm more than happy if I pass on my details to take that back and talk to my colleagues in the policy unit, so we can get back to you and see if there's anything we can do in terms of your situation. More than happy to do that. And if anyone wants to find out anything else about the FSB, please feel free to contact.
Thank you very much, Tom, and thank you for your contribution. Over to community. Kate, is there any last points you'd like to make?
And just thanks so much for organising tonight. I found it really interesting listening to the discussion and the ideas that have come out from everybody in this call. So thanks so much for organising it. I think it'd be worthwhile maybe regrouping after the budget and sort of have an analysis of what the rest of the year looks like. But we'll leave that in SME for Labour's decision. And just to say, at Community, we're a really proud champion of self-employed and freelance workforce. If you want to find out a bit more, do get in touch. And I'm more than happy to have a conversation. But great to see you all, and thanks again.
Thank you very much, Kate. And we started with him, so we'll finish with him. Andy Chamberlain. Andy, if we could take final words from you.
Thanks, Mark. And just to echo what everyone else has said, it's been a great discussion, and thanks so much for inviting me along. I've really enjoyed it. Liz, I'm afraid I don't know anything about the pub code either, so I can't really answer your question. But I do know that I think there's big problems with the way that the pub business model is structured. And I think that a lot of pub tenants have a very hard time of it and are actually sort of a bit, I think that they're treated very unfairly, often by the brewery. So I think that that's a whole area that could do with being looked at, pandemic or no pandemic. And clearly during the pandemic, it's been exceptionally hard for that sector. So I really hope that they can bounce back stronger and the government does offer them some support. Just one thing I'd just like to end on is to say that the self-employed feel quite abandoned by this government. It's not just the pandemic and the gaps in support that they've suffered with. There's a few things going on around tax, something called IR35, which self-employed people can't stand, and the government's determined to bring that in. And I think there's an opportunity for Labour to come in and show real support for this group. So please do, my sort of plea to Labour is to get to know the self-employed. They're an important part of our labour market. They can drive the economic recovery, and they can be Labour supporters. So please do get to know us. Thanks very much.
Thank you all. Thanks everybody for coming. Delighted to also see Andrew Crook there from the Fish Friers Federation as well. One of the excellent work that you do all over the country, represent your members. Thank you very much, Liz, and others for the questions that they've asked. To SME for Labour, and we'd be happy to forward your email details to any of the speakers we've heard tonight. And do join the SME for Labour again for a really great programme of events they've got coming forward over the next few days. Keep an eye out on the website, and also you can log on and join their newsletters. So thank you very much for joining us tonight, and have a good evening. Goodbye. Thank you.
Thank you.
Bye-bye. Thank you, speakers, as well. Thank you very much.